What's up, YouTube? This video is brought to you by Webull. If you'd like to help out the channel and get 2 free stocks, make sure you check out my link below. Hey, I'm Sain, man. If you're new here, I make videos on personal finance, how to invest and build wealth through the stock market. Hey, I started the Robinhood challenge for 2 reasons. Number 1, I wanted to simplify investing for those that wanted to invest but didn't quite know how. And number 2, I wanted to show you guys in real time the companies that I invest in to grow my portfolio from $0 to 10K and then eventually from 10K to 100K. So feel free to join me on the journey by grabbing some free stock using my link below, or sit back and watch. Either way, I appreciate you. Today's video is about cheap stocks that I want you guys to consider adding to your watch list this week, if not adding to your portfolio altogether. But before we get into that, let's take a look at my portfolio. As you can see, my portfolio is currently sitting at $29,704.97. On the day, we're up 2%. On the week, we are down 6%. On the month, we are up a little bit over 11%. And if I take you guys 3 months out, we are up over 23%. And so today, man, I want to talk to you guys about 3 stocks that I want to put on your radar. And if you don't do nothing else, consider adding these to your watch list and possibly your portfolio. And so let's hop into it. Before we do that, let's take a look at the free stock we got on today. And I want to give a shout out. And we're going to go with the stock in the middle. And as you can see, we got ticker symbol HL for 1 share, $3.10. It's a win-win when you use my link. You get a free stock, I get a free stock, and we all come away winners. I appreciate any and every one of you guys using the free link below. Let's hop into the cheap stocks on the day that I want you guys to take a look at. And number 1 is Wells Fargo, ticker symbol WFC. It is currently sitting under $30 at $27.95. As you can see, I currently hold 50 shares of this with the average cost base of $27.57. I can tell you right now, I am looking to add 50 more shares of this really soon. And so if it comes down anymore, or even if it stay here, this will be something that I add to my position this week. Stock number 2 is At&T. This is another powerhouse stock, but right now it's at a great price. As you can see, ticker symbol T is currently sitting at $30.55. And anytime you can get this stock at $30 or below, you're really getting a good deal. Let's see, I own 50 shares of this as well. My average cost is $29.53. I am also looking to add 50 more shares of this as well. I'm going to get both At&T and Wells Fargo up to 100 shares in both of them as quickly as I can. Stock number 3 is NAT. Right now, as a somewhat of a speculative play at this price point under $5, ticker symbol NAT is $4.83. I own 50 shares of this too, and so my average cost is $4.46. If this comes between $4.50 or below, I will add another 50 shares to this as well this week. Again, it all depends on what the market does, and I'm just waiting to pounce on any drops or any dips that may take place in the market this week. And so I hope that was helpful, man. Without further ado, it is time for our question of the day. Our question of the day comes from BK Forever, and he's talking about a pump and dump. And so I wanted to take some time to kind of let you guys know what a pump and dump is, what it means, and what do you need to do if you're in a stock that's considered a pump and dump. Okay, so typically, man, more volatile stocks, some that are priced very low, people will get into them, and the getting to part is the pump. So they'll get into a low stock, let's use Hertz for example, and the getting into it drives the price way up. That's the pump. So you're pumping it, you're pumping up a stock, driving up the price, and then when the retail investor is not paying attention, you dump the stock. Okay, and then you dump the stock, which leaves retail investors holding the bag. And that's where the dump comes at, when you see something like a 62% drop within a stock that you're holding, or you're looking like, man, today it was up, the next day it went all the way down. You know what I'm saying? And so those are examples of a pump and dump. You may see it in some of the stocks you invest in, where you get it in low, and then you see it go up, and then all of a sudden it comes back low. That means not you, but somebody else has sold a substantial amount of shares in that particular company. That is known as a pump and dump. When you're investing, one way to avoid pump and dumps is to invest in more quality stocks. And so again, I'm not going to ever get down on you guys for taking advantage of the lower price stocks and riding them up and getting profits, because that's a good way to play some of these stocks. However, you lower your stress level when you have more quality stocks that will make a rise, like Apple or Microsoft or Facebook or things of that nature, because when they rise, they'll stay solid for a minute, potentially go up even further. You will very seldom have to worry about that stock dropping substantially in a short amount of time. The only time a stock like that drops is when the overall market will drop, or something really bad with the companies happen, okay? And so March 23rd was a good example when the entire economy dropped. And so no matter what stock you was, you took a bit of a hit during that time. So those are pump and dumps. I just wanted to bring the terminology because I think it's time that I have to introduce the lingo of the stock market so that you can kind of understand what's going on, and when certain things happen, what's actually happening. Listen, man, I make videos like this every week. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor, don't forget to like and subscribe to the channel. Make sure you grab some free stock using my link below, and I'll see you guys in the next one.